are in a fast market, Mr. Steve Straza. Holy moly. We're doing this earnings stream. Welcome everybody. We got Meta reporting, we got Microsoft reporting. They are doing, I guess they call it a gap and go. Steve, do they call it that?
Yeah,
Yeah.
looks like you're getting a big one from Microsoft. Well, up about 6% here. Both beats, just headline numbers, right? Haven't been able to dig in, but both beats look pretty awesome.
Headline
Uh,
numbers, I'll read them off to you again. We don't care so much about the numbers. We care really how they compare to your expectations, but really we care about how all of that compares to the recent price action, right? So Microsoft, it was a top line beat on the revenue, 70 billion for $68 billion. EPS bottom line also beat $3.46 per share versus a $3.22 estimate. The guidance for Microsoft also came in higher. That's very important. Meta, same story. Top line beat, very nice beat by, just a cool $1 billion. Bottom line also beat by over a buck per share. And
but that's crazy. They beat by $1.20 on an estimate of like four something. So that's like a 20.
estimate was 520 per share for
That's
Meta. They
that's a
came in
monster
at
surprise.
$6.43. They came in also above estimates on their sales guidance. I'm still going through it just as you are. I'm trying to find anything that is not good from
Yeah.
this.
What
But
was the sales? 42?
who are we talking about?
Meta.
Sales was 42. What do I have here? I have so many headlines. The sales was 42.3 versus 41.4. The sales guidance for the current quarter
37 and a
was
half.
was in line, the sales guidance. So Microsoft is up as we're talking 5.5%. Meta
Yeah.
is up. Um, I just lost it off my screen.
I thought either way.
Where's Meta?
Um, so here's the thing. If we're just taking a step back, these two companies, it's really cool that they report on the same exact day at the same time. I don't know if there's two stocks in the market of their size and maturity that are consistently just literally knocking the cover off of earnings quarter in and quarter out. This has been going on for a long time now, and it's absolutely incredible. On balance, both of these companies, which are, in the $1 trillion club, some of the largest companies in the world, 20% top line growth, 20% bottom line growth, pretty much every other or every quarter that we come out here. The problem, though, Spencer, is that they're coming out with these incredible earnings releases every 3 months, and the market is no longer treating them as favorably as it was last year. So we're used to these companies coming out, reporting great earnings, and the market rewarding them for those earnings.
It's a very good point. How many times in the last decade can you look at that chart on Microsoft and say, huh, it's got nothing for a year? Not many times, right? It's,
So let's talk about
it's more than a year. It's a year and 3 months,
yeah.
4 months.
So let's talk about that. This is a massive top in Microsoft. Just can you go right to the Microsoft top,
Yeah,
wherever it is?
help me out here. Where there?
No, down, down.
There we
Yeah,
go.
yeah,
Okay.
there. Look, technology is important. I sent out a note about tech, a Straza letter today about technology and technology relative to the broader market. Here's the thing about tech. When it's going up on an absolute basis, right? When tech stocks are trending higher, seeing higher stock prices, tech tends to be the leader for the broader market. That tends to be, the big outperformer, where the alpha is. It's what you want to be invested in. Big tech. When prices are rising on an absolute basis, they tend to be rising on relative terms too. This is on slide 4, Spencer, if you want to show everybody what I'm talking
I
about.
do.
So all this is the relative trend in tech, large cap tech, sector spider, XLK, along with the absolute price trend. Sure, they'll dislocate over short time frames,
Looks
but
identical.
for decades now, we can pretty much rely on the relationship between these two lines, right? They move up and to the right together, and then they move down and to the right together. If we are going to, establish some sort of a tradable bottom or even a tradable low here for the broader market, I think tech's going to lead. Could it happen without tech leading? Sure. It's lower probability outcome, right? So I think the easiest bull signal right now would be tech bounces back and starts outperforming. This afternoon, right now, which just happened 10 minutes ago, is a great step in that direction. Microsoft coming out with a monster beat, being rewarded pretty well. Is it still up 5-6% post market? That's great. It's what you want to see. We got Apple tomorrow, another big one. You got Nvidia, I think, what, month and a half now, probably.
You got Amazon tomorrow too. Don't forget.
Amazon too. And people will say, oh, Amazon, Meta, they're not tech. Call them what you want to call them.
Please.
You know, Tesla's not tech. They're just building like the first humanoid robots, right? They're all tech, right? So if Meta and Tesla and Amazon have good reports, it just bodes well, right? For Apple, Microsoft, and friends. And really, when I'm talking about tech stocks, I'm talking about big cap growth stocks. I'm talking about Mag 7 stocks, right? I'm talking about the big four names that are reporting this afternoon and then tomorrow afternoon. Where they go, I think the broader market goes. I think this chart shows that really well. So tech looks like it was completing a top, right? On absolute terms, check down to the VWAP from the 2022 bear market lows and surged off that level. And what has been happening with it since the market bottomed earlier this month? Leadership, relative strength off the lows is back with tech, right? Now we have catalysts coming up in the form of earnings reports and earnings reactions. Those are looking like positive catalysts right now. If these two lines, scoop and score, get back above these shelves of former lows and start moving up and to the right again, then we'll look back to these patterns in days, weeks, months ahead, and we'll say, those were some epic failed tops, just textbook failed tops, right? Where bears get all in, right? They get all bared up on something. It looks like a major distribution pattern, and then nope, it's just a whipsaw and a little shakeout move, and then we're back off to the races. If these lines, right, start moving up and to the right again, and these were just failed tops, we're going to be talking about new all-time highs at the index level soon. What do you think about that?
Yes, all of that can be summarized that if tech goes up, so too does the market, right? that's what it comes down to, right? Also, if tech goes down, well, the market probably does too, right?
You make me feel stupid. I mean, I could just come on here and say that, or I can prove it to you. I'm showing you. You can't.
No, you're right. You're right. Okay.
We have the data, Spencer, and it's been that way for a long time. Where tech goes, the broader market goes. And I think with everything that's going on in Europe, and look at the Bitcoin, right? Stocks around the world, you're seeing risk appetite explode overseas right now. You're seeing Bitcoin and cryptos trend well. And then I'm over here talking to you about really a risk-on ratio, XLK versus SPY. I think it follows everything else, right? Risk appetite is looking good out there, especially outside the U.S. Let's dive in and talk about just the reactions lately.
Yeah. So you want to start? Let's start with Meta here. Shout out Meta for actually giving guidance. Not every social media company is able to do that, apparently. But
no. You make a good point. Shame on you, Snapchat. It's absolutely ridiculous. No, do you see what the big boys do? Right? The best companies in the world, they put on their big boy pants. They don't start pulling guidance, right? Because the stock market's down 20%. That's just an excuse. I think that was pathetic. But pay attention, right, to the way that these companies report earnings and the way that they lead and talk about their numbers and talk about their futures. Like, these are the best in the business. You could learn from these earnings calls. I know Spencer can't wait. Every time earnings season rolls around and we get to Mag 7 week, dude. Right?
This is like I think of it like game day, right? You really only get 4 games a year. You really only get 4 peaks behind the curtain a year. And are the numbers that the end all be all? No, because what really matters is the reaction to the numbers. That's what we're going to talk about right now. The reaction is the law, right? The numbers are what they are. The numbers can be good, they can be bad, but if the stock goes down, does it really matter? Stock goes up, it matters, right? So but no, I mean, I do care because, especially now, because now we get all these companies that are going to basically they're forced to have these public, basically their press conferences essentially, and they're going to get asked questions about the tariffs and how it affects their business. And they're going to in some cases, sidestep them, but in other cases, they're going to be able to talk about them and how it affects their business for real. And we shouldn't take that for granted. Transparency is a good thing. I like to hear from executives. I like to hear from companies, and I'm glad that we get to do this 4 times a year. So that being said, here is a graphic that you guys put together from the All-Star Charts team. This
Yeah.
is the last 4 quarters worth of reactions to Meta earnings. So again, it's not so
Yeah.
much about the number, it's about the reaction. Because if you go look at Meta and you go look at their history of earnings, I'll tell you right now, okay. The company basically always beats. They pretty much always beat.
Yeah.
There has been a couple of exceptions over the years, but if you go back to its history as a public company, which goes back to what, 2012, I think, Meta slash Facebook, they beat like 95% of the time, right? So
Meta is in a conversation this cycle, right? Because they ended last cycle, things were not going well. Didn't look like this. But for this cycle, outside of Palantir or Nvidia, this is the most impressive fundamental story of the past several years. It's Meta. And you nailed it. They're not just beating, I mean, they're just crushing the numbers, quarter in and quarter out. And if this table showed you a little bit more history, right, and went back another 4 quarters, you'd see some dark green in the reaction and the reaction scores, right? Meaning not just did they beat on the top and bottom line, but the market rewarded them for it. Then all of a sudden, this started happening last year, pretty much when these topping patterns in tech and growth stocks started forming, the market stopped rewarding them for reports for their earnings numbers that were just as good, as the quarter or the quarter before. And that's strange. It's a change in character, right? So when we see that earnings sentiment kind of shift, right, and the earnings trends shift like that, we're always paying close attention. Question now is, can we reverse this, right, and head back to a situation that was more like 2023, where they're beating and the market likes it again? It seems like for what they just did, Spencer, this is kind of a muted reaction, in my opinion.
we're up 3% after hours. I don't actually have my software up, so I can't see how.
3%. We'll see.
No, it's not a lot. You're right. It's not a lot. It's hard to fathom sometimes because when Meta comes out and they beat their EPS estimate by 20%, and the revenue was a B, but let's not pretend it wasn't the greatest beat. They beat by $1 billion, which is not nothing, but it's not 20% out of like their EPS beat was. So it was a good report. I'm not trying to poo-poo it or anything.
You can't poo-poo it because we're in an environment where companies are pulling guidance, absolutely blowing on the top line, right? And these guys are out here just like business as usual.
Pretty much daily active people. This is across Facebook, Instagram, WhatsApp, whatever else they have at this point. Who even knows? Daily active people, 3.43 billion, up 6% year over year. I remember the question that this company had years ago was like, how many more users could they possibly get if everybody has pretty much, if you're on the internet, you have WhatsApp, Instagram, or Facebook, right? You have one of the three. So
can I tell you the cool thing about these tech businesses? Go to chart 14. If this was your revenue mix and you were in any other business than internet or software or cloud, right? Like these companies, this could be a problem. There's a lot of global exposure here.
In terms of the user base, sure. Yeah. And the revenue, right? But
this is where their revenue is coming from. You can't really tariff the internet, though.
That's the thing, right?
Pretty cool.
How do you tariff ads on your phone, right?
I guess, Spencer,
in theory you can. I don't know.
Back in the day, like early Mag 7 bulls, they would tell this story, and they weren't wrong, 10 years ago, of these stocks being recession-proof in a way, with some sort of like subscription model or sticky model, right? Something that people don't leave. We're seeing it right now with Netflix, right? The relative strength from Netflix.
Dude.
Nobody's getting rid of their Netflix subscription because there's problems with trade wars and stuff like this. So the best analysts that covered these stocks and were early bulls on them said they're recession-proof. They're not just recession-proof. they're just built different. They're a lot of things proof. They're tariff proof. They're trade war proof, right? They have more money than anybody. They can invest in anything. They swallow up their competitors. They're just special businesses. And the reason why you care about these reports and these stocks, right, is because like any good investor, they're really material to your portfolio. And if you're a passive investor or you're an index fund investor, Spencer, these guys, Mag 7s, 40% of the S&P right now, 43%. It's almost
Well,
half. I'm sorry, 43% of the Nasdaq 100, but 32% of the S&P 500. A third of the S&P 500 is 7 stocks.
yeah. I mean,
They're a big deal.
I just told you that half of the Earth's population is using Meta, Instagram, or WhatsApp on any given day, right? The population of 8 billion people, right? So three and a half of them are on are on one of these apps. So it really is insane.
So look, they're good reports. What are we looking for tomorrow? Spencer and I will be on the morning show.
No, we would not.
Oh, no, we won't.
No show tomorrow, sadly.
All right. So what will we be paying attention to tomorrow and looking for? Drop a VWAP from the all-time highs in both of these stocks. Once those levels are reclaimed, you can be confident that the bulls are back in control. Not just of the primary trend, but the short-term trend, the intermediate-term trend. That's really the level. Today, do we have the XLK chart taking back VWAP? Where is it?
That guy? No. Yeah. There you go.
Today, XLK actually closed above the VWAP from its all-time highs. If you look at something like the Microsoft chart, right? That VWAP's going to come in pretty soon. If this top fails, right? They say from failed moves come fast moves in the opposite direction. Microsoft already up nicely after hours. Look for some follow through tomorrow and into the end of the week, and then look for a VWAP recapture. Then I think it's all systems go, right? And you treat all these Mag 7s as their own, and we'll get clues as time goes on, right? If this bullish scenario of tech failing this top, like you're showing here, and then tech also failing its top relative to the broader market and taking on some sort of at least intermediate term leadership, right? If that situation is playing out in the market, you're going to see Microsoft fail its top. You're going to see semiconductors fail their top. You're going to see NVIDIA be back on trend again, right? Stocks like Palantir and Netflix, people are going to be talking about more and more and more. That leadership's only going to continue, right? So we'll get those clues along the way.
Wait, Gene, take my charts off for a second. I want to add a funny screenshot that someone dropped into our chat here. Yeah, this is how we know. This is how we knew, how we should have known. We all should have known in hindsight that Meta was going to blow it away. What do we got here? Can this picture paste? What's going on? It won't let me paste because I'm not signed in. Son of a gun every time. Okay, well, while I do this,
Meta's up 4% now, Spencer.
Yeah, look, to quote one JC Pretz, you gotta let him dance, right? But the initial reaction, but what's weird is the initial reaction is usually, I shouldn't say it's weird, but it's usually the overshoot, right? So
Yeah.
to have it, how high did it get at one point? How high did we get on Meta? I've got Microsoft up here. Let's get Meta up.
But hold on.
We got to 580. All right.
But here's the important part. Everybody go and pull up a post-market watch list. NVIDIA's up over 2%. Broadcom is now up almost 3% aftermarket. Amazon is up 2.5%, right? They all go together. This is a basket. Yeah. This is a group, right? NVIDIA's probably excited and Broadcom's excited. I'll bet you Dell's up too. Let me see.
So this is a good day because it's
Dell's up too.
It's not just Microsoft and Meta, right? We have Qualcomm, we have KLAC. Today would be a good day for one of these other random tech companies to come out with bad numbers, right? We didn't even talk about the fact that, Steve, there was a huge buy algo into the end of the quarter close or end of the month close that we just got half hour ago. Yeah. Huge green candle into the close. Yeah. So bias to the upside. That would be a good time. If you have not great earnings, you should drop them right now if you can. It's not how it works, obviously. But
I mean, that buy algo or not, I see a bullish engulfing candle in XLK at the VWAP from all-time highs. Like, things are looking good. Then you look at the aftermarket, right? And a major sympathy bid for mega cap growth and the tech trade and the AI trade specifically. If we can come in tomorrow, stick the landing, right? Close with another nice green candle.
Yeah.
Broader market. And then stick it again on Friday and close the week well. look,
Yeah.
we're looking more and more like Europe out here, U.S. stock markets.
All right, here's the, I guess, meme. I don't know what you want to call that. It's not a meme, but here's the screenshot I wanted to put up. How
Hmm.
we all should have known Meta was gonna blow it away because Zuck was on Theo Von, and you don't go on Theo Von
Yeah.
unless you're confident that you're gonna
No,
crush
what?
it.
He went from the biggest nerd in the world to the biggest bro in the world.
His transformation needs to be studied,
Yeah.
and whoever he hired,
Yeah, his
uh,
PR people are the best in
whoever
the
he
world.
hired can just name their price because they're really good at what they do.
Yeah,
Right. He
totally.
went from robotic nerd who looked like a pale robot testifying in front of Congress to this cool dude who surfs on July 4th drinking a beer. Right. I mean, going on Theo Vaughn, it's crazy. Anyway, so
It's
Meta. Okay, that's one thing. Let's talk Microsoft real fast.
And
We
throw up
have
the Koifin charts too, just because they're so pretty. I want everybody to see them. It's
okay.
just another way to visualize this table, Spencer. The Koifin charts. So I'll explain it, right? So
Where are we charting
top
here?
panel,
Okay.
top panel is top line, sales, actual sales versus estimated sales. Because they're always so close, they're almost overlapping each other here. Then below it in blue, that's the earnings. So the bottom line, actuals versus estimates, right? And you could see in some quarters, right, where the blue dot is above the hollow dot, that's just a big beat. And then what you want to do is you want to look down to the bottom panel here and say, okay, so we got a big beat on the top, a big beat on the bottom. Did the market like it? Did the market agree? Was it a market beat, right? And then that's showing you the reaction in the session after the report was released for Microsoft stock. So what you're seeing here, right, is back in 2022, 2023, when the bull market began, right, early cycle, they were getting rewarded more often than not for their earnings. Then all of a sudden, the last 3 quarters, market doesn't like it anymore. However, the beats have been just as real. They've been just as good. So that's earnings sentiment.
In other words, well, you could say it's earnings sentiment, or it's really just general mega cap tech sentiment, right?
Well, earnings sentiment would be a part of broader market
Yeah,
sentiment.
yeah. Um, okay, so that was again, those are huge beats, and the stocks are going to do what they're going to do after hours, right? I'm sure tomorrow morning, uh, Kenny Glick, who's going to be live on our channel, is going to be getting down and
Here's the
dirty
thing,
in
right?
these
From
names.
a general market perspective, the market has to be happy when it gets great news. That's important,
Oh yeah.
right? And this is great news. These are some of the best performers in the market, companies with truly the best fundamentals out there, consistent earnings beaters. The market has to start liking that kind of stuff again, right? That would be bull market behavior. For the past several quarters now, it's been bear market behavior with the way the market's been reacting to otherwise excellent and exciting reports, right? From some of the biggest tech growth bellwethers in the world. So if we can go back to a place where the market likes good news from these big guys again, I think that's just a big positive. And then you would expect to see more of that, right? From Apple and Amazon tomorrow and all the other big tech earnings reports that we're going to get
So
down the line.
yeah, that I was about to go there next. You read my mind. So let's not forget Amazon and Apple tomorrow. Now the bias, if it wasn't already, is definitely to the upside. If we're looking at,
Yeah.
earnings reactions, or at least the numbers themselves. Microsoft blew it away. Meta blew it away. Tesla did not. They have some pretty unique circumstances around their business that don't apply to the other ones because they're really they're not pure software like these other companies are. Um, who do we already had? We had Netflix, right? They crushed it. So if Apple, a lot can change in a day, right? If Apple and Amazon come out tomorrow and say, it was okay, quarter was okay, guidance, it's okay, right? If they, try to pump the brakes, then this is all going to turn. This sentiment's going to turn 180 degrees, right? In a matter of one day, and that could happen. Um, so if they don't crush it, watch out, is kind of what I'm saying here. But we'll have to find out tomorrow. Apple
So
and
far, so
Amazon,
good. So far, so good.
Apple and Amazon kind of live in the same realm. And, all these Mag Sevens, they're all really good at what they do with regards to the earnings reports and the estimates.
Well,
They pretty much know what they have to do to, like, quote unquote beat the street, right? That's why we don't really care so much about the beat or the miss as the reaction. So
and
If I was a betting man,
Knows
I would.
too, Spencer. And the market's smart, and it's already telling you. Look at Amazon up 2.5% here after hours.
Right.
Why is Amazon up 2.5% after hours? Go look at the way that Azure just absolutely crushed it this quarter. Microsoft's cloud business is
Dude,
killing it.
It's 20. How is it 20%? It's like 20, 30% every quarter. I don't understand how these cloud businesses keep growing like clockwork at a 20, 30% clip. It
At a
is
certain
insane.
point, you just have to say, okay, it's crazy, but I accept it.
It is
It's been on for
insane. It's been
10
going on
years.
for years.
Yeah, long time. Again, these companies are built different. They're special. That's why I'm always happy to come on and discuss their earnings releases and reactions. We say it all the time, right? But this is truly a big week for the market.
Yep. So shout out to Steve, what he's been doing with Breakout Multiplier. If you guys want to, I should probably drop a link in the chat before we get out of here. If you guys want to get more, get Steve's options trades. He's been hitting some home runs, extra base hits, doubles, triples, home runs the last few weeks. He nailed the downswing, nailed the rebound. I just dropped a link in the chat. There you go. He might be getting down and dirty some of these earnings plays after they report, after the earnings are out of the way, Steve. Then that's your signal, or that's one of your signals to.
And frankly, a bigger signal is what we just talked about. We've been saying to Breakout Multiplier members, listen, guys, we'll get a lot more aggressive on the long side once we're to and through that VWAP from the all-time highs, right? Yeah. XLK is back to and through the VWAP from the all-time highs. Now you're getting the big pop after hours, so it looks like tomorrow will be a confirmation day for that move. The S&P, the NASDAQ, they're already there. Yeah. So it looks like we're finally getting a valid reclaim. It's looking more and more like a V-shaped recovery for the U.S. stock market.
If you want to get Steve's free email, it goes out most days in the afternoon/early evening. The link is in the description on YouTube. It's called the Straza Letter. It's completely free. And today went out already, but so you missed it today. Sorry if you didn't get it, but
but if you're interested in what we just discussed, right? We elaborate on that chart of XLK and XLK SPY in today's note. So check it out.
All right, cool. We're done here. A lot to get to. Thanks for watching, everyone. Again, no morning show tomorrow. We'll be back on Friday. We got Kenny Glick live all morning though, so stay tuned for that. Thank you, Steve. Thank you, chat. Drop me a like. Thank you, everyone. That's it. Adios.
Later.